Hey, good day, folks. Fortunato Puleo here with Vista Finance Group, and everybody calls me Fortune for short. Today, I want to take a few minutes and I want to get this off my chest. I want to dispel all the white noise and all the myths that are out there that you hear about annuities in general. Now, I've been doing this business now for 35 years, and I have sometimes clients come to me and they go, "Well, Fortune, I understand what you're saying, and it makes a lot of sense to me. But when we do research on annuities, when we Google annuities, we come up with information that, has us second guessing what you're saying." And I go, I totally understand that. I go, let's talk about those articles. Let's first and foremost find out who's writing these articles. Okay. What you'll find 9 out of 10 times, these articles are written by financial advisors who are not in the annuity space. And secondly, you'll find writers from financial blogs or what have you. Like just today, I read an article about annuities from the Motley Fool, and the article is completely contradicting itself. So I'm going to kind of break that down. I'm going to probably do this in like three different parts. And what I want to talk about, the three different parts will be taxes and the implication of taxes on annuities, fees on annuities, and then commissions. So let's talk about taxes. It's been said to me, and it's been said to me by other clients and other advisors, that when you take non-qualified assets and you invest it into an annuity, what happens is when you start taking out an income, you're going to be taxed as ordinary income. Precisely. That's how programs work. So let's take it this way. If you took $100,000 and you put it into a brokerage account, whether it's mutual funds, stocks, it doesn't matter. You put it into an account, and that 100,000 grows to $200,000, and you start pulling an income from that resource. Do you think you're going to pay taxes on it? Absolutely will. You'll be paying taxes on the first $100,000 because the government wants their taxes. When you start getting into your principal, it'll be tax-free because you are now going into what we call the cost basis, money which you've already paid taxes on. Now let's take a look at an annuity. You put money into an annuity, and let's say down the road we have $100,000 you put in, and down the road we have $200,000 in what they call income value. And now that annuity is guaranteeing you a 5% built-in income rider. Okay? And now that's going to pay you $10,000 a year. Guess what happens? The first $100,000 that you take out as income will be completely taxable. But as you start to bite into your $100,000 principal that you originally invested, which was after-tax dollars, money you've already paid taxes on, that becomes tax-free. Now, here is the major difference between having the money into a brokerage account and in an annuity. If in the brokerage account, you outlive your money and you now have taken out not only what you put in, but all the growth, and the account value is now zero, could you call the broker and ask them to continue to send you a payment? They will look at you like you're missing a point. Okay? However, in an annuity, if it came to the point where not only did you spend down the money that you put in, but also the growth, and now the account value gets down to zero because you've been blessed with longevity, guess what happens at this point? You will still continue to receive that $10,000 a year. And my question back to you and all my clients is this: would you have a problem paying taxes on an income that is derived from an account that no longer has any value in it? I'm sure the answer to that is no. So again, when you look at annuities, please understand there are good annuities and there are bad annuities. What I tell people, look, I don't think annuities for everybody. Okay? I'll be completely honest. However, what I don't like what the other side of the aisle says, they'll tell you annuities are for nobody. And that's not right. Because honestly, annuities will have a place in your portfolio for your future income. By the way, according to Yahoo Finance, people that retire that are surrounded by friends and loved ones that have enough guaranteed income coming in every month to cover all their expenses actually live longer. So an annuity is just a great way to do that which, by the way, that Motley Fool article that I read this morning actually talked about that. So if you think that this information is information that made sense to you, all I ask is this: don't take my word for it. Please do your own research. But as you research things, then you now have to research where the information is actually coming from. And ladies and gentlemen, I'm a common sense approach type of person. My attitude is plain and simple. If you walked into your butcher store and you asked him or her what they thought about you becoming a vegetarian, what do you think they would say to you? Well, that's no different than you going to your advisor and explaining to him, hey, I might want to move some of my money that I have with you into an annuity. They're going to try and convince you against it, and they're going to steer you towards these articles that a lot of these companies say, hey, when your client wants to move their money, point them to this article. And they want to put fear in you to get you to stop making a decision that could be truly beneficial for you and for the longevity of your retirement. Again, my name is Fortunato Puleo. Everybody calls me Fortune for short. I'll see you on the next video. Until then, God bless. Thank you for watching. And if you enjoyed this content, click right here on any of these videos to get some more ideas on how you could better prepare yourself for retirement.